Welcome back, accounting boffins, right? Remember, we're busy with a question on cash budgets. A quick recap: when you are dealing with budgets, please note, ask yourself the question. And in accounting, here's another trick for you for the exams, an examination tip. In accounting, you have to be mad. What do I mean by that? Talk to yourself. Sometimes you need good advice, right? So talk to yourself. Ask yourself, talk to yourself and say, right, what is required here? What am I expected to do? Remember what we said? If you're doing the cash budget, you're looking at receipts and payments. And if the question is based on the projected income statement, then clearly you're looking at incomes and expenses. Okay. Also take into consideration, it's a forecasting tool which we actually use. It's not something that is prepared and put away. No, we refer to it on a continuous basis to see what action we need to take in order to avoid us having a situation where we have a cash deficit, okay, or a loss. Right, now we are expected to calculate missing figures indicated by A to D in the incomplete cash budget. All right, so my focus is my cash budget. Let's look at it and see. There's my cash budget. As you can see, there are missing figures. Now, just before we go into the missing figures, just to draw your attention to the cash budget. Remember, under your receipts, you're going to have all your cash items. As you can see, cash sales, collections from debtors. Now remember, in the previous segment, we did the debtors collection schedule. That debtors collection schedule will fit into my cash budget. Can you see collections from debtors? Now obviously, we calculated those figures, so that will fit into my cash budget, right? Fixed deposit, clearly you can see this is a fixed deposit that has matured, meaning money has come into the business, right? It could also appear under payments when we take money out of our bank account and put it into a fixed deposit. Okay, then we have interest on the fixed deposit, and then you have sundry cash income. Under payments, you've got cash purchase of trading stock, payments to creditors, salaries and wages, equipment, manager's salary, interest on loan. Okay, so this is just an extract of the cash budget. What are we expected to calculate? Firstly, the cash sales for September. What information do we have? We are told that our total sales amounts to 800,000 Rand. Credit sales amounts to 75% of the total sale, clearly giving you an indication that your cash sale has to be 25%. How do I get that? Clearly, 100% total sales minus credit sales of 75% will then give me my 25% cash sales. So this is what I do. Immediately I say, fine, take out my calculator. There we go. 800,000 is my total sales, right? Times the 25%, which will now be my cash sales. And there we go. 200,000 is my cash sales for the month of September. So here now, if I now go and look at my calculation, their cash sales, I slot in the 200,000, which was a required in terms of my question. Got it? So determine cash sales, credit sales, percentages, and then the calculation. Right. The next thing that I have to calculate now is my cash purchase of trading stock. Let's see information that we have. Information regarding purchases. Okay, in this question, the examiner was kind to you. They gave you the purchases figure. But remember, whenever you're calculating either cash purchase of trading stock or payments to creditors, the most important figure you have to calculate is your cost of sales. Once you have calculated your cost of sales, you then break it up into cash purchases and credit purchases. And the reason we do that is because in our questions, we use what is called base stock. What is base stock? Base stock simply means whatever stock you start off with at the beginning of the month is the stock that you will end off at the end of the month. So whatever stock leaves the business is the stock that will be bought to replenish so that we have the same amount of stock at the beginning of the next month. Got that? Brilliant. Okay, so here we go. We are told that 40% of all purchases are for cash, right? Here we have our purchases figure, and we are also told that creditors are paid in full after 30 days to take advantage of a 5% discount. We'll come to you later. Right now, let's focus on the question at hand, which is the cash purchases. So, this is what we do. Remember, we want cash purchases for August. So, the first thing that you do is you determine your August figure for purchases, which is 550,000. Once you've ascertained and you've got the 550,000, very simple, 550,000 is your total purchases. You want cash purchases, which is 40% of that figure, and there you go, 220,000 is your cash purchases for that month. Let's look at our cash budget. Here we go, 220,000 as a payment. We slot it in. There's my 220,000, which is my cash purchases of trading stock. Once again, when you are expected to calculate either cash purchases or payments to creditors, hone in, aim at cost of sales. Split up the cost of sales then into cash purchases and credit purchases, and thereafter do your calculations. But depending on the information. In this particular question, you were given the purchases, so it was not necessary to calculate your cost of sales. Right? Please check and make sure that you read the full question. Okay, in C, payments to creditors, right? We did say we're going to come back to this one here. Let's see what we have here. We want our payments to creditors for September. So, in terms of the proviso, we are told creditors are paid in full after 30 days to take advantage of a 5% discount. So, you're paying in 30 days, it means you're paying the month thereafter. So, clearly you can see that you will now need to work on the 550,000, because what you bought for in August, right? The 550,000. The amount that you will pay for cash obviously will be in August, but the credit component you'll pay in the month thereafter. So obviously you start off with the 550,000. Here we go. Take your total purchases figure of 550,000, and then what we do is step number one, 550,000 is a figure that we are working with. Work out your credit component. What percentage was bought on credit? Remember, 40% was cash, so obviously 60% would be the amount that you are buying on credit. Okay, so multiply that by 60%. Let's do that. Okay, there we go. We've got our 60%. Now, what's this calculation? Once you've ascertained your credit purchases, like we have, which is 330,000, okay? Now, what percentage are you paying? Because the question clearly said you were given a 5% discount. So clearly, you're only going to settle 95% of that amount. Because we're settling our accounts promptly, we're taking advantage of the 5% discount while we're on the discount. Remember, discount allowed and discount received does not feature in my cash budget. Reason, they are non-cash items. However, discount allowed and discount received will feature in my projected income statement. Discount allowed as an operating expense and discount received as an operating income. Okay, that was just by the way, but important. Okay, so here we go. So we said 330,000 was the 60% times the 95%, which is the amount we're going to be settling. And there we go. 313,500 is the amount that we will be paying our creditors. Watch what we do. Here we go. 313,500 is slotted into my cash budget as my payment to my creditor. Okay. What have you noticed? That when you are working out your cash purchases or your payments to creditors, the figure that you finally work with is the purchases figure, right? But like I alluded to early on, depending on the information that is given to you, very often examiners ask you to first calculate the cost of sales and then move on to the purchases, but obviously depending on the question. Now what do we have to calculate? We have to calculate D, and that is our interest on the loan, right? Let's look at the information that we have. A loan of 800,000 was negotiated with Bob Investors at 18% per annum. Interest on the 31st of December 2019, right? Interest is not capitalized. Okay. When we're talking about capitalization of interest, I think it's important at this stage for me to give you a quick explanation of capitalization of interest. When interest is capitalized, all that it means is that the interest is added back to your loan account, right? So what's your entry when you're processing interest on loan? You debit interest on loan, which is your expense account, and you credit to your loan account. Watch here. Now, obviously, this is more applicable to the adjustments, but I think it's important for you to understand the concept of capitalization of interest. So here's your interest on loan, right? There's your loan account. So if you're capitalizing the interest, you're debiting your interest on loan, which is your expense, and you're crediting your loan account, meaning the interest is being capitalized. It's added back to the loan account. Okay, so keep that in mind. When they're talking about capitalization of interest, this is what we mean. Okay, all right, in terms of the question, we are told that the interest is payable every 3 months on the 31st of March, June, and September, and the 31st of December, commencing on the 31st of March 2020. Okay, so here we go. Interest on loan start with 800,000, which is the capital portion of my loan. Therefore, this is what I do. Start off with the 800,000. 800,000 is the amount of my loan. Okay, now, the rate of the interest was 18%. So obviously, you're going to multiply this by your rate. Take into consideration what we've always said, art, amount, rate, and time. So the amount is 800,000. As you can see, my rate is 18%, and my time, in this case here, will be the 3/12. Right? So whenever you're doing any interest-based calculation, right, or you're doing a calculation on depreciation, always take into account art, amount, rate, and time. It's very important to get used to this calculation. Okay, so if we look at our calculation, it's 800,000 times the 18%. Let's do that. Will give me a figure of 144,000 times 3 divided by 12. And clearly you can see your amount is 36,000 Rand, meaning it will be paid off every 3 months. You'll be paying off an amount of 36,000 Rand. Now, in this particular one, how does it impact on our cash budget? Let's see. There we go. Clearly you can see in September, which is one of the months in which the payment will be made, we will be making a payment of 36,000 Rand. Okay, so what have we done? We have successfully completed the missing figures. That was A, B, C, and D. And in this way, you can clearly see we have now completed all our calculations. All right. I think a whole lot of calculations has caused a bit of tiring amongst all of us. Concentration levels. Let's take a quick break. When we come back, we'll be refreshed to do our last segment. See you just now.